Oh my goodness. It's a good day for some Diamond Hand coffee because it's a pretty bad day everywhere else. Oh, it's really hot. Oh yeah. Okay. Wow. Well, welcome back to our hopefully W-shaped disaster. This is pretty incredible. We are pretty much going back to the pits, and nobody wants to go back to the pits. But the hope that we collectively have, knock on wood, is that this dip does not end up as low as the prior one. We do think we might get close to it over the next couple days. Let's take a look at what the heck is going on over here. So, first things first in the pre-market here. Well, pretty much, let's go to all stocks. Everything's red. Okay, a couple things that are green. Restoration Hardware, Darden, and, oh, of course, GameStop. Red. Sorry, these guys are green. Everything else, SPAC, tech, you name it. Red. QuantumScape is down 14.4% in the pre-market. Naked Brand, Blink Charging. Biden's got like a $3 to $4 trillion infrastructure plan coming, which will include charging. Despite this, Blink Charging down 8%, Plug Power down 7.5%, Fuel Cell 7%, BNGO 7%, Matterport another 6.5%, Li Auto by about 6%, EXPI about 6%, Sundial, CRISPR, Macrovision, Neo, all down. All 4 to 5%. Upwork, 4.8%. Pinterest down 4.8%. Tattoo Chef down 4.8%. 1845. Social Capital, NGA, all these guys. We're pretty much, we should just zoom out and go to the last dip and get used to that number. So what is that? 1741? Still got some room to go to complete our W-shaped sort of crash. Yeah, look at this. These are all down 3 to 4% right here. Again, C3AI, Agora. Roblox is now officially under IPO price at $62. Peloton, Airbnb at 172. Win, Nikola, PSAC, that's Faraday Solutions. Lemonade, Lemonade's at 86. Otherwise, these are all down about 3 to 4%. Tesla's actually not doing as bad as many of the other ones. Well, obviously, which are down a lot more. Tesla down 2.9%, which is a little interesting to see that resilience at Tesla. Though we do believe that if the W shape holds, which is kind of what we drew over here, that we could get within 10% of 539, which would be around 580. Excuse me. Woo! All right. Well, what else is going on? Well, more pain. More pain, because, well, there's pain almost everywhere here. Etsy down 2.5%. Palantir is at $21. Woo! We've got. Oh, well, that's not right. See, come on, Mr. iPad. You're supposed to go to the computer. There we go. All right, anyway. Okay, wow. Let's see here. DocuSign, Nikola, First Majestic, Alibaba, Wayfair, Peloton, all of these guys down 2%. We get into the 1% losses here. This is actually where we get the recovery sector. So the airlines and the retail are down about 1.5%. So this is where we see these guys over here. So it's really, again, tech, SPACs getting kind of 2.0 destroyed. And the travel, hospitality, this sector more like 0.5% to 1.5% down. Yeah, but yeah, average out. Woo! Somebody's gonna ask my psychiatrist if it's okay to listen to comments on Twitter. Good luck. Oh, jeez. So, wow, yeah, this is it's pretty red, pretty red. And what we'll do is we'll pull up Bloomberg here and try to identify what the heck is going on. What do we got over here?
You've said that many times.
Oh, that was the greatest. And I've got to tell you, this is emblematic of
by the way, they benefited from middle market stuff. They benefited from the SPAC craze, and many firms have. And so we'll have to wait and see if these numbers, it doesn't appear that they perhaps will be sustainable.
Is it peak?
When you have 81% capital markets net revenue over what was a record a year ago anyway.
Yeah.
There's the opening value here right now. It's the big board. SEMrush, a maker of online marketing tools, celebrating its IPO. And over at the NASDAQ, also celebrating its IPO. Diversey, it's a provider of cleaning and hygiene products.
Pretty red. I'm surprised they're talking about, I don't know which stock it is, but one certain stock that has already been high and hitting highs over already high highs. But anyway, it's interesting because these are the biggest folks who are generally always buy this, it's awesome, this is awesome, this is awesome. And like if we watch CNBC all day long, it would just literally be buy everything under the sun. Because every company they're talking about, it seems like they're either nice to or recommending buy. And maybe not every company, that's not true, but lots. Okay, let's see. So let's take a peek at the top news here, just so we can try to figure out what's going on. So now we know what's happening. Let's see what Bloomberg thinks. So we've got U.S. equity futures declined, erasing earlier gains, as the Federal Reserve Chair said the central bank's upbeat economic forecasts already reflected both stimulus and future progress with vaccinations, progress with vaccinations. Oil turned lower after a rally spurred by the blockage of the Suez Canal. Contracts on the S&P 500 and Dow held onto their decline, even as data showed weekly jobless claims falling more than forecast. So, in other words, we got good news on unemployment data today, but the market's selling off anyway. And again, they blame Jerome Powell for basically not coming in on his white horse to save the day. The pre-market, Nike lost 4% as the company risked a boycott in China over its practice of not sourcing cotton. Oh, okay, from a certain region. Western Texas WTI fell below 60 a barrel. Attention is also turning to the Treasury 7-year auction to gauge the direction of bond yields. Poor demand for this maturity in last month's sale helped trigger a global sell-off in government debt and interest-sensitive stocks. The benchmark 10-year yields were steady around 1.6. Interesting. In Europe, we also had stocks fall. So the 7-year is now what the auction of the 7-year is now what apparently we got to pay attention to today. Not great. All right, let's see if we can get the 7-year. Okay, so we'll pull up the 7-year chart. Let's see what's going on over here. Pricing, we would guess this is between 0.8 and 0.6, or sorry, 1.6. So what? I don't know, somewhere around over 1.2. Oh, yep, there. What is this? 1.24. Okay, zoom out here a little bit into the 3-day. So here's what's going on in the 3-day and the 7-year. I mean, this seems pretty benign. It seems like it's been falling here. Let's go to the 1-month chart. So we do have a sort of an average up on the 1-month chart. And so we've got an auction today at the 7-year. But lately, the bond auctions have actually been doing okay. They haven't been doing as terribly. Just the market is just so nervous about everything. 5-year. Let's pull the 5-year. Stock market seems to be pretty sensitive about the 5-year. But even here, okay, 0.81. Yesterday we were at 0.8, so up a little. Here, I'll hide myself for a second. So yesterday was here. This was yesterday. And then here's today, the beginning of today starting. The transition point on the day, somewhere right around here. Right here where this line is. So we have declined. So we'll see how the rest of the day goes as we hit auction time. But there's definitely some red. So let's see how things have opened, and we'll keep trying to digging to figure out what's going on here. So AMC and GameStop are actually up 5% right now, and it looks like we have some of the recovery sector turning green. So this is actually better than what we had in the pre-market. We've got GameStop. I'm sorry, Home Depot, Bed Bath, Target, Fastly, AT&T. A lot of these guys turning slightly green here. It's about 0.5%. It's nice to see a little bit of green, but we've actually, we've got a lot of red over here. Rite Aid not setting up the stage really well for some recovery stocks though. big kind of red sell-off yesterday after they forecast worse numbers than to be expected. But we hop on over into tech and growth. Tech and growth is just, again, getting destroyed, much like what we saw just about, almost 17 days ago. 17 days ago was the big oopsie-doopsies. And look at just how low things had gotten, right? So intraday, we got to 37.79. But we are now associated with the worst day, which was March 5th. See, this was our lowest point, was on March 5th. And we're now exceeding the bottom part of that candle, but not the bottom part of the stick for an intraday decline. So we could get down to 37.79 at quantum if we go to that level, and who knows? But the hope is, if we went to that level, certainly that we bounce off of it. But the real hope is that we don't even get to that level. We'll see. Plug power is down 6.5%. Plug power did not get as low as it is now. Not everything matches, but plug power is lower than where it was. We've got Open Door, which fell all the way to 17. That's currently at 21. We've got Matterport. This fell into like the 11s. Matterport fell down to intraday 1124-ish. Right now we're at 1324. So I really hope the W shape holds up. I mean, that'd be nice. A nice W shape recovery. Okay, let's see here. Apple. Did Apple turn green? Let's see. Apple APL. Yeah, wow. Look at this. Oh, this is good. Oh, so we have a little bit of a recovery actually here. Good. Look at this. Apple, Peloton. Good. We've actually got some green here. Yes. So that makes me wonder, if we go intraday, are we seeing these lows get eradicated? Yeah, we are. We're actually seeing the market recover from this. Good. Tesla back to 622, up from 610. Oh, good. We're kind of opening off this bottom here. Bouncing off this bottom. Okay. Well, let's see here. And now we could certainly bounce down again, but no, this is very good. So let's see here. Okay, so we've got where's Redfin? Redfin's at 61.66, also recovering a little bit off that bottom. Very, very good. So this might be an opportunity to try to buy something. Yeah, it does look like we're quickly trying to recover here. You've got Tesla recovering, lots of things recovering right now. Upstart's really pushing again here. What a U-turn here. What a U-turn. We are at the moment U-turning. So let's look at what Bitcoin is. Yeah. Bitcoin back up. This had fallen intraday to, I want to say 50. Yeah, there we go. I was going to say 50-ish. 50,400. And we've got 51,000 now. So we are coming back up a little bit. It looks to me, let's see here. Come to all stocks. MP Materials up 4%. ZOM now up. Okay, we are coming back a little bit here. This is good. Let's see. We've got Quantum's actually kind of coming back as well here. It's good that we're going into the minute chart here, and we can see this a little bit more. Yeah, Redfin recovering a little bit here. Rocket recovering. Etsy at 195. Stagnant, but trying to recover. Enphase recovering, but still low at 145. FRX, oh my gosh, FRX is under $10. $10, by the way, is deemed that sort of par value where the SPAC investors are actually buying the shares as part of the PIPE, which is like usually really an exciting thing to be a part of, because it's like, oh yeah, pipes don't lose money, and we're actually below that right now. So, wow, okay. Alibaba trending up here, all just within the last 10-15 minutes here. Are we seeing a recovery here, which is very exciting. That's certainly better than seeing the other direction. Creates buying opportunities. Let's take a look at some of the tickers that we know. We've got Matterport now trending up. We've got Churchill Capital also trying to trend up here. I mean, this is a great way to open, is recovering off these insane lows that we had in the pre-market here. Yeah, Lemonade only down 2% now. We're Square. I saw Square here for a second. Let's go to the names. A little easier here. Sorting by names, some of the big ones. Yeah, look at that recovery. There was just like a brief flash in the pan. And now all of a sudden, Tesla's at 626. Just within the last couple minutes of talking here, we've seen a good 15-point recovery at Tesla. NIO, look at that as well. NIO fully, almost completely recovering now from this madness. That was so bizarre. Look at that. Palantir is now going green. Maybe it's because the market's finally realizing, like, why are we crashing again? These are some opportunities. These are some cheap deals. Yeah, because, I mean, the only thing we saw on Bloomberg was talk about yesterday with Jerome. Jobless claims came in better than expected. SPACs, what's this? SPACs fall on report. The U.S. SEC has opened an inquiry into frenzy. Into the frenzy or into frenzy? Like, is frenzy a company, or are they talking about the frenzy? We'll look. Powell says Fed won't stop until U.S. has all but fully recovered. Wonder when this was said. Okay. As we make substantial further progress to our goals, we'll gradually roll back the amount of Treasury and mortgage-backed securities we're buying. And in the longer run, we've set out a test that will enable us to raise interest rates, Powell said Thursday morning in an interview. Okay. So he said this many times before, but everybody's trying to define what is substantial further progress. And maybe it's helpful that he says that they're going to wait until the economy is all but fully recovered to pull back support. In other words, taper bonds. So maybe he saw the pre-market wherever he's talking today. He saw the pre-market and he's like, oh, man, your boy just lost lots of money. Maybe. Well, let's come on and say something good. Everything is moving off this guy's words today. And actually not just today, in really the last month. And it's happened before as well. You know what's crazy is he's like kind of like the stock god, if you think about it. That's a pretty powerful position to have. It's just he speaks and the market moves. All right, so looking at opportunities here, Pinterest is under, it's at 66.70, under 70. This is a nice place to buy Pinterest. Again, we're not as cheap as the bottom that we did see previously on March 5th, but we're definitely seeing some pain in the market here. Trying to see if this is going to be like a little fake out recovery here in the morning. Like we've seen this before. We've totally seen this kind of stuff before, where it recovers and then dips further. We'll see. What's interesting is it seems like other than Powell talking, finding the catalyst is a little challenging here. I mean, maybe the catalyst for the upside is Jerome, but we've got good news on jobless claims. We've got bond traders are terrible at timing Fed liftoff. Okay, here's a nice Fed article that let's see what they say here. Bloomberg says, a word of warning for all those bond traders banking on a Fed rate hike as soon as next year. This should be an interesting article. Yeah, since 2008, markets have underestimated how patient officials can be in lifting borrowing costs. Good. That's a good thing, right? What the market... See, here's the thing. The reason we've been crashing is we've had this overwhelming feeling that there's no way inflation can't come, and that because inflation is going to come, Jerome Powell is going to have to pull back support sooner, and then rates are going to go up sooner, and we're going to be screwed sooner. Now, the market is really almost overpricing this in. To me, this is a massive overselling that we've seen here in March for the nominal movement we've seen in interest rates. Look at this. This is historically, this is not a big deal. So this started February 19th. You could really see the acceleration of this run, right? Rates trending up, but all of a sudden trending up a lot. Oops. Let's see here. Can I grab? I'd like to be able to. Oh, here it is. Annotate. This is what I want to show you. So let's get rid of this. Okay, annotate line here. So take. Oh no, not horizontal. There we go. So take a look at this. This is the rate of growth we've had in the 5-year, and the reason the market recently has freaked out is because if we go to February 19th, right here, and we draw to now, look at the slope of the rate at which the rates are going up. It's much higher, right? It's a much steeper curve. It's not as flat. Like this is almost like trying to walk on a roof and not slip off. This is like you're just walking on a gradual incline. So that's been making the markets nervous. But I like to say overly so. I personally think this is an oversell. And if we grab from, let's say, March to February 19th over here on the, if we zoom out on the 5-year, right, to February 19th, we're kind of just really flat since last March, which is crazy. But again, why the market freaked out over this last month, look at this all of a sudden sort of explosion here on the 5-year in the last. It's really that slope. Now, what they're now saying on Bloomberg, if this would stop lagging, but what they're now saying is, hey, don't worry. The bond market sucks at trying to predict when the Fed's going to do something. Okay, the savviest speculators in interest rates are looking at trillions of dollars in stimulus and an accelerating vaccine campaign, and they're already concluding that there's no way rates can stay low without inflation. Exactly. That's literally exactly, I feel like, what I just said. I mean, maybe not word for word, but it's basically what I said. And I believe, and I strongly believe I'm going to be right, but I can't guarantee it. I could be totally wrong, but I strongly believe I'm going to be right. I think this market is going to go, damn, no inflation in like, give it 6 months. You know, if we get to September, August, I think this market goes, man, we printed all this money and there's no inflation. And we end up just all aboard a rocket ship to the moon. Obviously, again, no guarantees. Don't trade off that. Trade off your own opinions. But I don't believe this. See, here's a chart that says market versus the Fed. So the market is pricing in an interest rate increase as soon as late 2022. The Fed's really not pricing that in until mid to late 2023, and probably not even as high as the bond market believes. Traders were reluctant to realign their wagers with the speed of increases officials were penciling in after central banks began its last tightening cycle. That was part of because after its 2015 liftoff, the Fed failed to deliver multiple hikes it had projected for 2016. It eventually tightened only once that year as the Brexit vote dimmed the growth outlook. The dynamic shifted in early 2017 when traders had to scramble to price in a hike in response to Fed signals. In other words, over the last 10 years, the bond market has been utterly clueless about what's been happening in this market. But the bond market's trying to predict. Traders may have reason to hope that their rate hike bets will pay off. In projections released last week, 7 of 18 officials predicted higher rates by the end of 2023, compared with 5 of 17 in December. A handful saw a move in 2022. There were 4 dots. I don't know why they wouldn't just say 4, but there were 4 dots that were in 2022 for a rate hike to like 0.5%. Let's see here. All right, let's see here. Okay. Moving on. So let's look back at the sticks here and see how we've recovered. Fed has some breathing room. Great. Okay, let's see how we've recovered. Let's go back to the sticks here. If we are, or if we're turning back down. So Upstart, Zom, AMC up 5% here. recovery. Some recovery stocks have moved green. Dave and Buster's. Everything was red when we opened. And now we're actually recovering a bit here. So this is nice to see. Let's look at the losers here. For example, like the QuantumScape. Recovered, but now falling back down a little bit. CRISPR at 109. Wow, that's low. So we fell to 100 on March 5th, but still, this brings us to, just to compare, this brings us to about November. It's kind of what we've seen a lot of. It's really just the last 4 months of Dalahalas disappearing. All right, Pinterest down 4%. Kind of staying stable and down here at about 4% down. Yeah, tried recovering as well. Pulled back down. Plug Power, pulling back down. Etsy, 192. Yeah, see, pulling back down on the day here. Square. Okay, somewhat of a pullback, but let's see. Let's see if the market's going to fall back down to the levels we've seen this morning. Let's look, for example, see here, Tesla. Yeah, Tesla also falling a bit again. See, this is why it's like, I don't know. Is it going up? Like I said, we've rebounded back down before. Yeah, it's funny. Maybe it's not funny, but it's special. But sometimes we see all these green candlesticks in a row, and then we just end up going lower intraday. I do think there's still room to the downside to complete that sort of W shape down. And then hopefully we get that nice other half of the W, aka the V, back up. All right, let's see here. What is this? Anti-FANG bias evokes memories of .com crash. When the hegemony of FANG stocks crashed in September, it was a welcomed reprieve for investors who watched a handful of names rule the market all year. Now it's March, and the streak of underperformance by stocks with mega cap bias is becoming historic. Ooh. An equal weight version of the S&P 500, which nixes market value influence and equates Amazon with News Corp, has outperformed its cap-weighted peers for 7 months. In other words, the big market cap ones are hurting. Mega cap firms, some members of the $1 trillion club, loosened their stranglehold on the market after breakthroughs in vaccines triggered a rotation into reopening names. Yeah, I know, you're just describing what we already know. Bias against mega caps. Okay. Things have changed dramatically for tech companies since the internet bubble popped at the start of the century, but the group's sensitivity to raising rates has arguably remained the same. In the 7 months from late 2001 through April 2002, the underperformance of the cap-weighted S&P 500 index coincided with the rising 10-year yields, which traded north of the 5% mark in the spring of 2002. A similar pattern happened in late 2009 and early 2010. So let's write that down and look at this. I want to see that slope. So late 2001, and that's through April of 2002. And then we have late 2009 and early 2010. All right. But this time it's different. Now let's go to max. Let's go out to, no, not 1962. Let's go out to 2000. Let's go to the year 2000. Here we go. Let's look at the 5-year. Okay. So what we're looking for is late 2001. That would be right around, oh no, that's 2003. Where's 2001? Is this that yeah, this is the spike they're talking about right here. Really? See, like in hindsight, when we look at the big chart, it's like, really? This right here is what you're talking about? That's what led tech to sell off then? Like, look what was ahead of it. But okay, that's what they're saying. Late 2001, which is right here, to April 2002. Yeah, the March 29th right here. Yeah, probably the beginning of April 2002. The next big spike that they said was an issue for markets was what happened in late 2009 into early 2010. So that would be right here. Yeah, that's this spike right here. Also, like, not that big of a deal, right? So when we look relatively here at where we sit now, which is way lower, neither of these seem like a big deal. I mean, the 5-year in 2009 was at a peak at 2.61. And in 2001 to 2002, that break, it was around 4.8%. Now we're at 0.8%. And the market's freaking out over this. Boop. Like, it's nonsense that the market is selling off because of this. It's very, very bizarre. But yeah, I mean, we've seen that relationship. It's not, the rates aren't even going like, if we go to the 3-day, for example, on the 5-year, it's not like we're skyrocketing here. We can't really call this a skyrocketing. Just seems like a bizarre sell-off we had this morning. Very, very, very bizarre. I mean, everything was red, and now we are seeing some recovery. Let's see if that holds. So let's go minute chart here. GameStop just gave up some of its intraday gains that it had. AMC is up 4.55%. We got C3AI is actually up about 0.75%. All of this was red not that long ago. The open, like literally the opening bell was a disaster. Let's see what else here. So Matterport is almost flat. On this crazy day, Matterport is almost flat. Let's see here. NEO is down about 0.5%. It's not bad on the crazy day. We're holding this sort of support right now. We'll see. Tesla's recovering again. Yeah. See, kind of the similar midway support here, and now we're covering a bit. We're seeing this at multiple different stocks. See, look at Disney. We're seeing this at. We're seeing it at here Kappa. We've got it at. Let's see, what's Bitcoin doing? Bitcoin's even doing it. See, run down a little, flatten. We've got Tootsie Roll. I honestly have no idea why Tootsie Roll's even in here. Okay, Canopy Growth up a little. No, not up a little. It's also that same kind of shelf pattern. Delta Airlines down about 1%. Somewhat similar here. Netflix. Okay. All right. So I think we got the idea here that we're trying to stabilize on that recovery from the madness of this morning. The exception is something like ChargePoint. My gosh, ChargePoint under $20. Whew. Let's take a peek for a moment here at ChargePoint. Keep in mind, Biden's infrastructure plan, that's coming. And chargers are going to be a part of that. These are opportunities to look at good deals. The concern is obviously, how low can we go? Obviously. Okay, let's look at... I want to take a peek here at the earnings with you. All right. So what do we have here? We want to get... No, not this. Hold on. Here we go. Financial analysis. Now we can see at ChargePoint what kind of projected revenue we're going to have. I don't believe that this projected revenue, by the way, yet includes any kind of projection for what could happen with the Biden infrastructure plan. And so ChargePoint, their recent 10K had revenue that was actually worse on certain segments than previously done. And see, we don't really have a lot of data going into the past here. We just have projections into the future. And all of these projections until about probably 2024 show the company losing money. And we don't have anything past that, do we? Oh, no, we do. Here we go. Do we go profitable at 4 and 5? Not until 2025 do we think that, or does Wall Street think that ChargePoint will go profitable. And right now it would be selling at 100 times, approximately 100 times future earnings per share in 2025. It's a little pricey for a charging company. It's not like this is like some software as a services company. And, they don't have to worry so much about inventory and product expenses. Wow. Okay, let's take a peek here, see what Jimmy's saying.
A lot of empty storefronts in New York City that would do well to become dispensaries, Jim.
Well, anyway, I think
provide much needed revenue to the state and to the city.
Yes, that's why gambling's so good. They haven't gotten it right in New York. But I have to tell you, both these stocks should be higher. But if everyone's just going to focus on Palantir and BlackBerry and AMC, they're going to miss real companies that are doing real things.
And I picked up 2 of them from you today that you've
the
been
obsession is to
positive
stop.
on for some time. Although I don't remember you being quite as enthusiastic about Cisco as
No,
you
you're
were
right.
today.
You're right. I was. They had a couple of misses, but it was never expensive. And now I was waiting for people to come back to the central office, and now they're coming. So it's a reopening play, and I should have been more cognizant of that.
Okay, that's good.
David, we should not counsel despair. We should counsel despair, but start thinking about real opportunities with real companies like a Nucor.
Okay.
Like a Nucor.
Okay. I'll see you later on Mad Money.
You betcha.
Be watching anyway.
Yes, Restoration Harbor, RH.
I got it.
All right, take a look at. It's funny. I swear, I feel like they talk these stocks up, and they're like, "Oh my gosh, Palantir is so great. Oh my gosh, these things so amazing." And then when the market turns red, they missed a few earnings. I don't know. Just that was about Cisco, about them missing a few things. But yeah, I don't know. Maybe call me jaded. But that's yeah, I don't know. All right, so CIIG or C, whatever, they came up under both ticker symbols. Arrival has officially changed ticker symbols. Congratulations, Arrival. You are now ARVL. You are publicly listed. Your SPAC is completed, and you're down 10%. Welcome to the stock market. Oh boy, look at Playboy, down 4.7%. Rite Aid suffering more, down 20% now. We've got Enphase down 4.2%. This has not really grown off what the market open was. So keep an eye. We could see these red candlesticks worsen over the next I would say 30 hours, before the market closes again, which does remind me that in the next 30 hours, we do have, wrong button, the official end of the HODL coupon code. It officially expires tomorrow. That's it. The coupon expires, the price goes up of the programs. Not only because the coupon expires, but also because the next pricing regime goes into effect, which is higher. So, interesting. Look at this. Voyager Digital is up 5% today. So something to know. Voyager Digital, it's actually not a bad price, under 20. Voyager Digital, ironic. This seems so weird, but when Bitcoin's falling and then all of a sudden it rapidly goes up again, Voyager Digital does really well. And I think that's because the market realizes that Voyager Digital doesn't care about what the value of Bitcoin is. It cares about how much it's going up or down and how rapidly it's going up and down, because all of these trading brokerages for these cryptocurrencies, they love volatility, because volatility means people sissy paper hand and then they get fees. But volatility also leads to price declines, which means the hodlers come in and the buy the dippers come in and they buy, which are more fees. Folks, it's useful to always keep something like this on your desk. I don't sell these. I probably should. But a nice reminder to Diamond Hand, folks. Look at that. Oh, the Diamond Hand's right here with us. And when I look around, I got a few choices. I could pick up... Oh, there's still coffee in this. The Slayer cup here. We got Diamond Hands. And then, of course, folks, don't forget, buy the dip. Yeah. Good old now cold coffee. It's weird, just over the last 38 minutes, because it was piping hot when we started the stream, but I didn't finish it. And now it's cold. That's not really cold, but it's like bath water now. It's kind of like, ew. Like, nobody wants bath water coffee. It's like you either go iced or you go go hot. Anyway. All right. So what's happening here? Gevo, Nano Dimension recovering here. So a little bit of recovery happening here, which is nice to see. Wow, Tesla went positive. Look at the open on Tesla at 609. Oh my goodness. What a recovery here. This is incredible. We've got CCIV. There's still some good deals to be had here. I mean, take a look at just how things are damaged right now, of what is damaged. So Roblox, by the way, if you've been wanting to open a position in Roblox, folks, it is below IPO price now. You can now get in below IPO price at Roblox. ChargePoint, again, under 20 here. Very, very cheap. Let's see. I think does that bring us back to when they announced this back a while ago? Let's see. Let's go ChargePoint. So where was the announcement? When it was announced, it so rapidly went to $30. I remember SBE. Remembers ticker symbol SBE for a while there. It's almost below those announcement prices. Canoe, $12.58. We know this thing likes to rubber band back to 15. Endphase, 241 down, 2.4% down at 144. I mean, this is a bargain. Pinterest at 68, nicely below 70. Bargain. Let's go to the day chart here. Recovering again on the day chart. Yeah, good recovery again on the day chart here. We've got Lemonade also trying to recover. Okay. Yeah, this is incredible. I mean, from the pain we had as the day opened up. I mean, the day opened up so in the gutter. It was so bad. I mean, we were comparing to March 5th. Like, here we go. We're getting to those lows. And we instantaneously recovered when we opened. It was really incredible. That opening bell just really U-turned this market here. Thankfully, right? For the overall sake of the market. We've got AMC now up 10%, which is about double what it was when we opened. Upstart is starting to run again. Upstart is almost becoming like one of those trader stocks, which is a great thing to kind of play around with. Upstart has just been doing very, very well. A lot of momentum behind Upstart. I do think they're overpriced for buy and hold right now. Planet 13 is down 5%, so cannabis down a little bit. We've seen that at some of the others as well. Tuscan, Walgreens, Square, Unity, Social Cat. I mean, the red that we have now is not as bad. So now the question is, will this double dip within the day? Let's go to Bloomberg here quickly. Okay. Yeah. So let's take a look at the Bloomberg. I want to look at the top news here. Let's look at the news that the suits are reading here. Okay. Let's see. U.S. stocks decline in U.S. U.S. stocks decline in U.S. Oil drops. U.S. daily cases jump. Really? I want to see that. COVID cases. Really? I don't. Let's see here. All time. Let's go to past 30 days. I mean, where's the jump? Oh, let's go to show all. Okay. Yeah, there we go. Yeah, that is a jump. So we've consistently been under about what, 55, 60,000 since about March 8th, which is crazy. March 8th was also like, along with March 5th, kind of like the bottom of the market. And so all of a sudden a COVID spike there. But yeah, okay, a little bit of a spike. They're right. They're not wrong. 20,000 extra cases here. Soros cheap Fitzpatrick casts off safe label with 30% gain. U.S. mortgage rates hit highest level in more than 9 months. Wow. Let's see. I mean, they're still dirt cheap. Let's take a quick peek here. Zillow mortgage calculator app. Mortgage calculator app. Oh, I could just share this with everyone too. So we'll go back 1 year. Yeah. I want to see this run here. So take a peek at mortgage rates here. Which, by the way, there is also a one of the courses linked down below is the very, very popular real estate investing course. So if you know nothing about real estate, literally takes you from zero to millionaire in real estate. So that the same code, the code is HODL, which expires tomorrow. To get 38% off that one. That price will be going up as well. Okay, so where were we? Back to the sticks. What a weird day. Wow. Just bizarre. Wall Street banks anticipate SEC inquiries into SPAC market. Good, they fixed the title on this because the title was very bizarre. Let's take a look at this. Biggest banks are expecting US SEC to step up its oversight of the red-hot SPAC market. Why do they got to announce that at like the bottom of the market for SPACs? Excuse me. All right. For now, the inquiry appears to be mostly fact-finding, but it could turn into something more formal depending on what regulators uncover. Ooh. Okay. All right. What deals do we have here? Let's look at the names and just look for things that are really in pain here. So Airbnb, not below IPO pricing, but this is a low that we've seen recently. Let's go to the day chart here. Yeah, we have not seen this pricing, well, since Classic, March 5th, March 8th period. But otherwise, okay, yeah. I mean, we've been here before in January, and here was the IPO, so we're still above IPO. What was that, 140 something? Yeah, 149. All right, let's see here. Google, Amazon, AMC is now up 10%. American Air, Apple is 121. Apple, I'll tell you, has been very, very stable throughout these fluctuations. Apple's just been really, really range bound. That 120 number has been a big rubber band for Apple. Let's see. Beyond Meat. Beyond Meat's at $130. We are almost at that $120 price target. Well, it's not really price target, but it's sort of that acquisition target for me for Beyond Meat to go buy it. C3AI, $63, folks. Look at this company. This company here closed on its opening day at 99, ran up to $183, and is now sitting at $61. Holy smokes. Let's go in here. Let's look at it really quick. Let's look at their financials. Because that's just so low. Relative, right? But that doesn't mean their financials are good. Let's take a peek here. So C3AI, Wall Street believes will not be profitable in 2021 or 2 or 3 or 4. Right. So here's a company we do not think is going to be profitable over the next 4 years. Maybe that has something to do with it. Jeez. Okay. How's their revenue growth? Revenue is good, though. See, look at that. 32% growth projected, 34% projected, and then actually accelerating growth to 51% in 2024, yet still losing money somehow. Okay. I have not gone deep on C3AI, in fairness. Churchill Capital has turned green today at $22.87 a share. It's a bargain. Clever, Climate, Costco, Coupon, Darden. Okay, what else here? I'm looking at these prices. See, I would not say that Domino's is cheap right now. Domino's is certainly a stock that has been a nice recovery, a nice COVID play. But going into a recovery, I would not say that Domino's is cheap right now. I would not say that Dropbox is cheap right now. Enphase, I would say, is cheap right now. At 144, that's pretty cheap. We did run down to about 129 there briefly and into the 30s for Enphase. We could see more pain later today and tomorrow. Etsy, I would not say is cheap at 200. I think there are better deals to pick up on, though I love Etsy. So I would rather buy Enphase, for example, than Etsy, especially with this massive infrastructure plan coming. FRX, I still can't believe this is under $10. There we go. Now it's at $10. That is... I just feel like you're buying that like right at the par value. It's incredible. Or the pipe value, at least. GameStop, look at this. It was down. It was up 5%. Then it went to up 1%. And now all of a sudden, out of nowhere, it's up 15%, rallying again. Take a look at this. Zooming out. Look at it behave within our boxes. How weird. Like, if you don't have these lines drawn, folks, I don't know what it is about the 116, 124, and 142 levels. But it really is like magnetic for the stock. It goes up, crosses out of the box. It's like, no, get back in the box. Kind of bounces off the bottom here, bounces off the top, comes up, breaks out, goes to the top line, and bounces off that. Surely there must be something about these boxes here. Very, very weird. Okay. Jeez. Matterport, under 14, I think is a great deal. Not as low as we've seen it, but a great deal. Lemonade under 90. Lemonade I would pick up if it fell under 80. If we get Lemonade under 80 again, like we hit 84 over here, that's where I would be buying. So, part of me is, look, if we don't have that within 10% dip number, which we did not get to today for things like Tesla, Lemonade, some of these others, if we don't get to that within 10% of the March 5-8 levels, I'm a little bit more standby, maybe do little nibbles. Within 10%, that's where I want to go heavy on some of these things. So we'll see. We'll see if tomorrow ends up being red again relative to today. But let's take a look again here at some of these numbers here. Gosh, Zoom is at 317. We've got Zoms up about 8% here, running nicely. Xpeng actually went green. The market did not open very happy. The market opened under $30 a share for Xpeng, though we did go lower. We went to 25.2, so within 10% would be more like 27. 27 would have been more like within that 10%. We did not get there today. We were more like in the 29s. Walgreens is down 2.4%. I don't necessarily believe this is cheap. I also don't believe that Disney or Wayfair are cheap. These might be great companies, certainly like a Wayfair and Disney. I got my fingers crossed for Walgreens, but yeah, I don't think any of these are necessarily cheap where I'm like, oh my gosh, it's a smoking hot deal. Let's look at Ubiquity here. I don't think Ubiquity's really sold off that substantially. I know they've run. Yeah, see, not really that substantial of a sell-off over at Ubiquity. We've seen these prices for just this recent past year. No big discount over here. Tesla, hey, oh my gosh. I wonder if it's literally going to follow our little W shape. How freaky would that be if it just, I'll be very happy if it does. But yes, it does look like, Mike, we're going to be okay. We got our diamond hands. Hopefully you just haven't been selling in this kind of stuff. I know it's painful. And the problem is you got to be careful that you don't read the comments sometimes in the YouTube section. Because I'll tell you, every time the market crashes, you have market geniuses who come out in the comment section. And they're like, it's literally what they say. That it's stupid to buy an old. It's stupid. Don't do it. You're losing money. What you need to do is sell at the top and rebuy at the bottom and then ride that up. Okay, mister, I could time the market perfectly. So far, I've been pretty decent with my market timing, and I don't say that crap. Because remember, if you try to buy low, sell high, and then buy back in lower, you're trying to perfectly time the market 3 times. That's crazy. I'm just trying to time the market once. That's all I want. One good market timing. And that's my entry point. That's when I buy. That's all I want. I don't have to claim to try to sell perfectly, unless obviously we're swing trading. That's different, which we do as well. Not so much in this market because, look, you look at the after hours yesterday. The after hours yesterday were not signaling this massive plummet this morning. And that's why the after hours can be funny. They're just not predictive at all. But anyway, Tesla did go green here. 130 is still a deal. I'm really looking for that break of 600. Briefly, for a hot minute, we were at 609 this morning. If we break that 6 figure, that'll be nice. I still think it's possible that we could do that tomorrow morning. We'll see. I think that tomorrow morning is going to be a big day to pay attention to. I'm going to briefly look at the 7 and the 5 here. So the 7's at 1.24. Going into the 1-day chart, it's actually declined. Declined over here as well. There you go. Decline on this is a 7-year on a 3-day. This is the 5-year on a 3-day. So really declining intraday here. Remember, we had better than expected unemployment data come in for unemployment claims. Backing out a little bit. Let's see here. All right. All right. We talked about mortgage rates. I'm resisting the obvious title for today's column, says Macroman. Okay. Well, I don't know what you're going to talk about now that I don't know what your title is. Because I don't think it's that obvious. I edited the title of this video. from the market is falling more to now edit recovering. It's true. All right, Jeffrey sees young talented. He's okay. I don't care right now. I want to know what's happening here. Biotech's 15% tumble triggers more alarm bells on Wall Street. Okay. U.S. concerns about a lasting sell-off in biotech are growing after the Nasdaq biotech posted its worst 2 days in a year, and more analysts added their voices to the chorus of warning of rough trading ahead. This doesn't sound good for like an ARK G. Let's see how ARK's holding up today. Well, ARK's down about 2% right now. ARK on ARK G, ARK K 1.6%, ARK F about 3.4%. Okay, anyway, back to where we were here. So biotech has been reversing, record high. Nice. I love the runway when they draw the runway. So here we go. We're going on the slip and slide, boys and girls. Let's go. Buy and hold through the slip and slide. All right. With sector outflows no more than 5% in the first quarter, money isn't pouring out of biotech like it has in the past, at least not yet. Ooh, ominous. All right. Let's see here. Woo. Excuse me. Clarita, Fed. This is one of the Fed presidents. Let's see. Fed vice chair. Also one of the presidents. I believe he is. Hold on. Let's see if he is. Richard Clarita. Is he not? Maybe he's not. I thought he was one of the bank presidents too. Apparently not. Yeah. Nope. Never mind. He's just the vice chair. I thought he headed one of the banks. Oh well. Wrong. He says today, it will take some time for economic activity and employment to return to levels that prevailed at the business cycle peak last February, said Thursday in remarks for a virtual event. So this is the second person from the Fed basically going, don't worry, we're still here. We're still comfortable that it's going to take time. We're not going to raise rates. Really great article, by the way, earlier on how bond investors have really gotten this wrong. Inflation, as calculated by the PCI, is seen in the Fed's median forecast, ending at 2.4% in 2021, but slowing to 2% next year. It stood at 1.5% in January. Clarita said he expects any move about 2%. Wait, Clarita said he expects any move about 2% inflation to be transitory, and for inflation to return or perhaps run somewhat, our 2% longer run goal or return to our longer run goal of 2022 or in 2022 or 2023. Gosh, hello English. I'm a little funny right now here. So this is both Powell and Clarita trying to talk the market out of the madness that we saw today. So I'm going to take a quick screenshot of this here. I want to grab, where was Powell's as well here? Powell, I think that may have been in the Market Live blog. Yeah, see here. Equity slumped after Chair Jerome Powell yesterday had that upbeat forecast, but then today he had some nice things to say. And we're just sort of reiterating. I don't remember where they put the quote from him. It doesn't matter so much. But apparently he also spoke today and reiterated that they're not doing anything until there has been substantial further progress. This was a great article. Okay, going back to the sticks here. So what do we got? All right, let's see what we got here. So Rite Aid really selling. Oh my gosh, look at Arrival here. It's down 12% right now. So it's like SPAC completes the merger. Boom. It's down 12.59%. These are the warrants right here. We could actually just delete the warrants off the watch list. It gets a little confusing sometimes. So looking at all stocks here. Naked, QuantumScape, these guys selling off. QuantumScape down about 6%. G-Tech Holdings down about 4.5%. HelloFresh down at 70. This had run quite a bit. Planet 13 Marijuana is now broken under $6 here. A Vegas marijuana company down again. Affirm Holdings down yet again. Faraday Solutions down. Enphase down. Social Capital down. All these guys about 3 to 4%. Pinterest not down as much as it was, It does look like it started declining again a tiny little bit here. Let's go to the minute chart. All right, let's see here. Yeah, it's just volatile here, 2 to 3%. Let's see. Bumble's down, Square's down. These all about 2.5%. Let's take a peek. Also, I want to see what Bloomberg's covering. Let's see if they've got any good interview here. Let's go to Bloomberg TV. Let's see. All right, Bloomberg TV. Okay, where's the darn thing? Or is it live? Bloomberg. No, I want Bloomberg TV. Please turn it on. Here we go. Coming up in the launchpad because Fox Business is on TV commercial. CNBC is
letters to Wall Street banks on their dealings with SPACs. Regulators want to know about deal fees, internal controls, and compliance. And that is your latest business flash. Kaylee, Guy.
Britta, thank you. Guy, I have to say I'm not all too surprised that regulators are going to look into SPACs at this point. I mean, SPACs have raised through the mid-month of March, so 2.5 months into the year, $73 billion. It's insane.
Yeah, and I think there's this concern about the kind of phase 1, phase 2, and whether or not the whole process is overly kind of rewarding to the phase 1 investors. I as you say, I am shocked that anybody's shocked that this should be happening. You have seen the SPAC index coming off. I think that's probably unsurprising. I think there's also probably in there a quarter month end effect as well. So kind of worth bearing all that in mind. We're going to kind of stay with the tech theme, I guess. Coming up, CEOs of the biggest tech names, Kaylee, they're going to be facing lawmakers again. The issue today, who's responsible for policing their content? We're going to discuss all of that. Alan Patrikoff, Greycroft, co-founder.
It is interesting. The talking about these SPAC investigations. It seems like the SPACs, they can sell off together, even though some of the SPACs are really good. Like some of the SPACs are awesome. Let's see here. Okay. Wow, look at this. GameStop, 12%. But also, having this sort of this shelf right here within the box that we've drawn. It's almost like the market is tentatively trying to determine which direction to go here. AMC killing it today. Well, let's see how AMC's been over the last. Yeah, AMC's been on a downtrend. Let's go to the day chart here. Really since, okay, well, not for that long. So downtrend really at AMC since about March 19, and now recovering again. So I had a few rough days here. Now recovery. We are at almost $10 for AMC again. Nano Dimension going green today at $8.61. And this stock has been on a roller coaster. Bed Bath & Beyond up almost 2%. C3AI is up now. NEO is actually up. Look at that. NEO is up at 37.27. Let's look at what they did intraday here, how low they got at the open. Yeah, looks like they got to, at open, they were around $35 a share. That's pretty close. I want to say that's almost within 10% of that brief bottom we had on March 8th, which I personally think the more we hit that 10%, the more we potentially bounce off of that level. We have not seen that at Tesla. Grabbing Tesla here. Tesla flat, pretty volatile here. Gonna zoom out here for a moment. See, this is that 539 figure, kind of looking for that W-shaped recovery here. We will see if it follows that pattern. FRX is now up slightly above SPAC pricing. Pretty stable here. Stocks now. Really things have hit that shelf. Up, down, teetering a little bit, but not that pain that we had early this morning. Big recovery since this morning. It's amazing because it really only lasted like a minute if you were looking at actual market time, because right when that bell hit, that first minute was really a recovery starting to happen, which is good. I mean, that's exciting. All right, let's see. What else? Okay, I don't really see anything changing right now in the actual stocks. The only thing I see changing is the pricing on the courses, which goes up tomorrow when total expires. So take a look at that in the link down below. Let's listen for a moment here to one of the movie theater CEOs.
Early May. Mookie, over the last year, of course, the relationship between the producers of movies and those that distribute them has changed dramatically. That window that you used to have seems to have disappeared to almost nothing in some cases, and many say it's not going to go back to what it was. How is that going to impact your business long term?
Look, the window we had before was a good one, was a long one, and I think for the world of today, in a way, was even a bit long. We were ready to negotiate the window before COVID, but there was no really strong initiative from the studios.
All right.
But
I don't know that he's going to tell us anything interesting. I want to say, I really think this whole last month's sell-off has just been a fugazi. Like, why? Right? And because bond deals adjusted up a little bit, like, big freaking deal. Big deal. They've been way higher in history, certainly even recent history. So the rate of acceleration of them has gone up a little bit, but or not the rate of acceleration, the acceleration. So the rate at which they're going up, the acceleration, is up. But beyond that, you look around and things are getting better, not worse. Unemployment data getting better. COVID's getting better. More reopenings happening, certainly at least in the United States. Restaurants are jam-packed. It's bizarre. It really is like the suit weenie babies are manipulating the market in just a weird way off these bond trades. Just bonds might trend higher. Let's just sell off everything. It's very weird, and it does not feel accurate to me. Like, if we had a real reason for this crash, I'd be more concerned. That's why through this, I've just been like, why would I sell bottom? It doesn't make sense. It's not like there's a new pandemic. It's not like there's war. So what? A boat stuck in the Suez Canal and oil's going up because of it. So what? So what? Biden's going to print some money and, basically, the Fed's going to print some money, but Biden's going to take some money and spend it on infrastructure. This doesn't necessarily mean we're going to see inflation. Oh, we'll keep an eye on it. But so far we're not, with the exception of course, a lot of prices going up, which I guess I know can be deemed inflation, but we balance that against the things that are going down, like apparel costs going down. But yeah, look, I know input prices for real estate have gone up, which I think is manipulated by the real estate market, not necessarily inflation. All right, let's go back to the terminal here for a moment, see if there's any kind of update in terms of what's going on. All right, so put this aside for a moment. Let's go ahead and hit top news. All right, top. Let's see it. Okay. So what do we have here? We've got. Here we go. Hold on one sec. Later, I want to give you a quick note here. At 11 a.m. Pacific time, there is going to be an event that Kathy Wood speaks at, and some are saying Kevin O'Leary might be there as well. I do plan on covering that, so set a reminder for that because YouTube might not show you notifications. There we go. Okay. After this live stream, you'll get redirected there, so you can you can go hit the remind button. But anyway, yeah, no real changes here in the headlines. Let's look at the market blog here. Yeah, let's go to the market wrap. Yeah, I know. It's the temporary supply chain issues, leading prices to go up in certain cases, certainly the commodities. U.S. equities slumped for a third day. We know this. WTI up. U.S. stocks have come off record highs. We know. No, they have not updated this. We've already read this. No update here. Yeah, I think even Wall Street is looking at this like, what? Wait, why are we selling off again? And it wouldn't surprise me that it's actually the weenie babies this morning, and we expect that at market open are like, wow, things got cheap there for a moment. Let's go shopping. Would not surprise me. So Rite Aid is kind of continuing its sell-off here on pretty rough forward guidance. Naked Brand down 10%, QuantumScape 7.3%. Keep in mind, one of the reasons Quantum sells off is it's really not going to be until like 2024 until they have their battery tech. We got Canoe, Nike, all these guys down about 5%. Open Door, G-Tech. Looking for opportunities. Still think Enphase, Pinterest. See Pinterest furthering its decline right here. So Enphase, Pins. Let's compare for a moment to the open on these guys. How low did they go on open? So on open, we went to $65.50 on Pinterest. We're at $67 now. And on open, on Enphase, we were as low as 137. Right now we're at 142. Actually, you know, that's still relatively close. Okay. Otherwise, really though, overall recovery from some of these crazy lows that we've seen. Churchill did go red here again. We did see it go green to almost 23. Right now, Churchill is back to 2240. FRX still sitting basically at that pipe value. Tesla just turned red again at 628. Somewhat deflating again here in the market. We'll see if this accelerates, but so far it seems like the market has really stabilized, relatively flat, as crazy as it seems. You know, some things are green, some things are red. There aren't that many huge, deep negatives here. The market open was a disaster, complete disaster. But nice recovery since then. Going back to top news, I don't think we really have any changes here. Yeah, mortgage rates, no real changes here. Let's see. We got talking about the media shield, so liability protection.
And it makes them stronger and stronger and able to control everything we're doing. And I think
Right.
at some point, the government is the only source that can come in and control it, unless they come up with their own techniques. I think it all gets around to data sharing. If there was some requirement,
privacy, data sharing. Okay, what do we got over here?
Which has been adversely impacted by shutdowns, and the future looks a bit more uncertain on that front. So, what was the net impact to your business, and what are you looking at moving forward?
Yeah, look, you're exactly right. We actually had a great year last year. We grew our top line at over 2%, and not too many did that. But you're right. Some of our and food service, of course, really impacted by the lockdowns that we saw all around the world. So it's great to see that starting to come back in certain geographies. So that obviously took us down a little bit, but it was more than offset by our infection prevention business. We have a fantastic set of products, market-leading products, and that allowed us to really work with our customers.
Just a heads up. It looks like I screwed up the timing. This potential Cathie Wood event is actually starting Eastern time at 11. So that means it's actually starting in about 20 minutes. So if you're interested in that, I'll gladly cover that. And I have published that. After I end this live stream, you'll get a reminder for that. So I'll change the thumbnail and stuff. But anyway, that's actually starting in 20 minutes. And let me see. I want to see if I can find out who exactly is speaking. So it's CBOE, Cathie Wood, Jan Van Eck, and Kevin O'Leary. Cathie Wood and Kevin O'Leary event. It'll be fun. So, okay, let's see. I wonder, let's see. Okay, here, you'll hear okay, here are the topics. So, lively conversation about the finance industry today and current events that may impact the market. I mean, that sounds pretty solid. It's kind of exactly what we want to talk about. So, yeah, let's cover that. So, here's what we got to do. We've got 20 minutes, and then that event begins. So, what I would say is, get your 38% off coupon code, link down below right here. Take advantage of that before it expires tomorrow. You get lifetime access to all the lectures and the content in it. We get to chat together throughout the day. We get the private live streams, which private live streams every day the market is open. And that's really more Q&A. Like here, these live streams are really covering what the heck is happening, right? But that's more of like I'm literally reading every question and trying to answer every single question. So that could be very helpful for folks to run their ideas by. And we do some high conviction analysis too. Yesterday we went deep on Palantir. It was fun. So would love to have you there. I think it's a bargain for what you get. Most people agree once you're inside. Yeah, but anyway, make sure to use that coupon code. But I'm going to hit end here. As soon as I hit end, you're going to get a pop-up that redirects you to that Kathy Wood and Kevin O'Leary event. Have that open, tab it open, hit remind, and I will see you there. Thank you so much for being here. I'm glad we recovered, and we'll see you shortly. Thanks. Bye.